What if I told you there's a defense stock that just reported over 1200% revenue growth and raised its full year guidance again? This is not a penny stock, we are talking about hundreds of millions in annual revenue, with a backlog of almost $1 billion. It's directly linked with Palantir, and Donald Trump has just lit the fuse under this entire sector in recent days. Today's stock is Ondas, ticker symbol ONDS, and they've just announced some big news. Before we get into it, if you appreciate these videos, then don't forget to like and subscribe to the channel. I'm aiming for 500 likes and comments, so please help the channel out, help me hit that goal. Now let's get straight into it. Looking at the charts, we can see that Ondas has had a very strong rally over the past few weeks. The stock is up about 40% since dropping to its lowest price since November 2025. However, it is still about 35% below its June 2026 high. There is so much great news recently that can drive this stock onwards. First of all, on the macro side, President Trump bolstered national security and strengthens US supply chains by imposing tariffs on drones and their parts and components. This was signed on August 13th, and the tariffs will take effect 21 days after signing, so this will come into effect early next month. This announcement sent the shares of a number of drone and aerospace companies flying on Friday. The biggest winner of the day was probably Unusual Machines, ticker symbol UMAC, which popped more than 25%. This is a company valued at $1.7 billion, but is doing only a fraction of the revenue that Ondas is doing. Ondas just released their earnings report this week too, so I will be looking closely at that later in this video, so stick around for that. Anyways, yesterday's tariff is a 100% tariff, and this is just the latest in a series of announcements from the Trump administration. Earlier this year, the Trump administration launched the $1 billion Drone Dominance Program, and the second stage of that project is slated to begin this month. While for 2027, the Trump administration is asking for a record $1.5 trillion defense budget, of which the Department of Defense is looking for $75 billion for drones alone. So that is all huge stuff for the sector overall, but what about Ondas specifically? It's important to understand exactly what Ondas is. Ondas is a technology company focused on autonomous systems, robotics, and mission-critical defense technologies. The company operates through Ondas Networks, Ondas Systems, and several other companies including American Robotics and Aerobotics. Put simply, Ondas is aiming to become a system of systems company for defense, security, and critical infrastructure. That means it's building integrated solutions that can detect threats, gather intelligence, communicate securely, and respond autonomously. Ondas's products are designed for markets such as defense, homeland security, border security, and critical infrastructure. Its portfolio includes autonomous drone systems, counter-UAS technology, ground robotics, UAVs, and ISR capabilities. This is where the investment story becomes particularly compelling. The world is clearly moving towards greater adoption of drones, autonomous systems, and counter-drone technologies, creating demand for software-driven companies capable of developing the next generation of defense solutions, and Ondas is positioning itself at the center of this long-term trend. August has been a big month so far for Ondas. The company has loads of great news, starting on August 5th, when Ondas announced that its US-based defense prime contractor, Mistral Inc., has received a $50 million order from the US Army for Tactical Lethal Unmanned Systems, or LUS. The order was issued under a previously awarded $982 million multi-year indefinite delivery, indefinite quantity contract, supporting the US Army's LUS program. Combined with the initial $190 million awarded under the program, Mistral's total awards to date exceed $240 million. So this order does three things. First of all, it demonstrates the strategic rationale behind Ondas's acquisition of Mistral in the first place. Then it helps move Ondas deeper into the precision strike market, where demand from the US Department of War and allied forces continues to accelerate. And finally, the expanding operating footprint in the US makes Ondas increasingly well positioned to compete for and win large multi-year programs. On the very next day, Ondas announced a new AFRL contract to advance long-range Grasshopper autonomous aerial delivery system. The contract is valued at more than $6 million and was awarded to Dyne Technologies, another company that was recently acquired by Ondas. Following the acquisition, all contract work is now performed within Ondas Sentinel, and this new contract award adds to Ondas's growing US defense pipeline and reinforces its position in scalable, low-cost autonomous logistics. This award also reflects the broader strategic value of Ondas's recent acquisition, extending the company's autonomous defense portfolio into mission-critical logistics capabilities. Now, for context here, the autonomous defense platforms market is valued at $69 billion now in 2026. This is expected to grow at a compound annual growth rate of 14%, up to $198 billion by 2034. While a research paper from Grandview Research valued the overall defense logistics market at $175 billion, and this is expected to grow to $295 billion by 2033. So these are huge addressable markets that Ondas is looking to take an increasingly large position in. While this week Ondas have announced that they have completed the acquisition of Cyberhawk, a leader in AI-powered critical infrastructure intelligence that had previously been announced, and Ondas announced that it has been awarded a multi-million-dollar strategic tender by the Israeli Ministry of Defense to develop and produce the next-gen tactical attack drone capabilities. The program represents a broader effort to advance IMOD's tactical drone capabilities, and under the program, Ondas will lead the development designed to meet evolving operational requirements and enable scalable deployment across frontline combat units. But what do analysts think of Ondas? Looking at tip ranks, we can see that Ondas is rated by 8 Wall Street analysts. There is a consensus price target of $19, while the high target is $25 and a low target of just $13. Analysts have updated their targets in the past 2 days, with 5 new ratings following their earnings report. These recent price targets are very bullish, ranging from $18 up to $25, with several analysts citing the company's massive increase in revenue, backlog, and increasing guidance once again, while also commenting on the enlarged US manufacturing footprint, solid balance sheet for capacity, mergers and acquisitions, and a recent high-profile leadership appointment at Ondas Defense. It was announced yesterday that Royal Bank of Scotland increased its Ondas stake by 160%, purchasing 236,000 additional shares. But there is a lot of institutional activity happening around this stock. If we look at Fintel, the ownership flow is dominated by buyers. Institutions are holding a significant amount of shares, and institutional ownership is at an all-time high, having taken another huge jump in the past month. BlackRock is the company's largest institutional holder, recently increasing their shares by more than 300%, while Vanguard increased their shareholding by a whopping 8,900%. But it's important to understand why Wall Street has recently become so bullish on Ondas stock. But the biggest news of the week came yesterday when Ondas released their Q2 2026 earnings report, and at first glance, the market didn't seem impressed. The stock dropped after the announcement, but when you dig into the numbers, there's a lot more going on than the initial reaction suggests. So let's break it down. The headline number is revenue, and this is the big one. Ondas generated $83.8 million in revenue during the second quarter. That's a 67% increase from the first quarter and more than 13 times what the company generated in the same quarter last year. Now, for context, analysts were expecting around $68 million, so Ondas beat estimates by roughly $16 million, which is quite a significant outperformance. What's even more encouraging is that management said that if you strip away the impact of recent acquisitions, the core business still grew around 85% year over year, which tells us that demand isn't simply being bought through acquisitions, the underlying business is still growing rapidly. During the quarter, Ondas booked approximately $175 million in new orders. Then after the quarter ended, it announced another $105 million in orders, bringing the company's backlog up to $757 million. So think about what this means. That's hundreds of millions of dollars in future work already contracted, which gives us a far better idea of our expected revenue over the coming quarters. And management was confident enough, thanks to this, to raise guidance once again. They increased full year 2026 revenue guidance from 525 up to 550 million. And they pulled forward their adjusted EBITDA profitability timelines. Management also said they expect third quarter revenue to jump again, landing somewhere between 140 million and 155 million. So next quarter will be another huge jump from today's 83 million recorded here. So why did the stock fall? Well, the answer is simple, and it's a common one when we see companies expanding this quickly. The answer is profitability. Ondas recorded an adjusted EBITDA loss of just over $50 million, which is much larger than last year's loss. Looking at the company's actual financial statements, we can see that they have a very strong balance sheet. Ondas have total assets of $2.9 billion and total liabilities of just $1.4 billion. This is a huge improvement over last year, where liabilities have increased by about $700 million, while assets have increased by more than $1.8 billion. While they now have $650 million in cash and another $720 million in short-term investments. They have very little debt. $1 billion of liabilities is in the form of warrant liability, and overall, Ondas has stockholder equity of $1.5 billion. Looking at the income statement, we can clearly see the massive growth in revenue, $133 million for the first 6 months of 2026, compared to $10 million in the same period last year. That is a massive increase, and a gross profit has increased from $4.8 million up to $60 million. But the company incurred massive expenses during the year, general and administration of $171, meaning that the operating loss was a massive $205 million. Now, one of the important things to note here is that this was primarily driven by a $105 million non-cash expense during the quarter, mainly comprising of $67 million of stock-based compensation. This kind of expense is one-off and not recurring. Interestingly, management stated that the elevated losses in the first half of 2026 represented a front-loading of expenses ahead of a significant revenue ramp expected in the second half of 2026 and beyond. The company views these expenses as investments necessary to support long-term growth and market capture, and as prudent and limited in scope in relation to the significant opportunity ahead. But guys, what do you think? This is one of the most interesting small defense stocks on the market right now. They have massive growth, huge partnerships, huge backlog, and if Ondas can deliver on its growth story, then Ondas could become one of the most important AI defense stocks to watch over the next few years. So let me know in the comments, do you think Ondas is still early, or has the market already priced in too much hype? This video took a lot of time to make. This is longer than my usual videos. So if you appreciate the research, make sure to like the video, subscribe to the channel, and I'll see you in the next one.